Hello everybody, welcome to another update on the stock screener. In this video we will talk about uranium and the current situation. So this is the uranium chart and it has gone up a bit. I'm very bullish on uranium. I know that. I know that China is going to double uranium demand. I know that Sprott is buying uranium on the market. So I guess uranium could go a bit higher. But what I'm not agreeing with is that uranium miners are cheap because they are overvalued. And I'm going to show that in this video. So first, let's talk a bit about the demand and supply side. So this is the supply side. We were at 30 just a few months ago. And now we are at 45, going into the 50 and 60. What you need to know here is that all of this supply here is going to come online in the next years, probably in 2 years. So this is a lot of supply. So that's almost a doubling in production, because this is first half and then this is the second half. So this is a doubling in production of the uranium miners. So this chart is probably not going to be correct anymore. Okay, demand is going to go up, but supply is probably also going to go up with all of these mines coming online. So you will see more restarted idled capacity. You will see more planned mines, more mines under development come online because they have more money to do that. And they are all profitable now at the price of 50 to 60 uranium. So this supply is going to keep going higher together with the demand. So that's why I think that uranium can go up to 60, 70, but in a few years it will probably drop again. Okay, so here we know China is going to double uranium demand. And globally, it looks like this. You will see uranium demand go up by 30% in 10 years. I don't think that's a lot. When you compare this to lithium, lithium has multiples of that demand coming online. This is just 30% in 10 years. That's nothing. That's even less than copper. Copper has 4% per year. So you can be bullish on uranium, but not that bullish. Okay, so China is going to increase demand, double, triple. So these are the scenarios. And Sprott is also going to buy. So this is the amount of pounds that they bought. So it's increasing. Now here it's leveling off a bit. So I think the uranium bulls are satisfied now. So they are saturated. You can also see that in September we had a lot of premium on the Sprott, and that premium has now collapsed, even negative. Okay, so today it has gone positive again, so maybe we could see a bounce, but the trend is going down, so there's not a lot of interest anymore in uranium. I think the price will be around 40 to 50 range bound when we consider this premium. So I think uranium bulls are already too late, and especially in the miners. So I'm going to go through some of these uranium miners, and I will tell you how overvalued they are. So Bannerman Energy, market cap around 300 million, mine life 15. This is already a red flag. They need capex that's higher than the market cap. So you will see a lot of dilution in this stock. So this is the NPV, and this is the NPV chart. So we are currently at $45. So, I mean, this is just laughable, okay? Laughable. When you, let's see if I can do this backwards. So at 40 uranium right now, this NPV is negative. Negative. So this company cannot make any money. Okay, next, Boss Energy. I think the market cap has gone up a bit, but let's take 300 million. Mine life 11, capex is okay. Production 2 million, and AISC is okay at 30 because the price is higher now. This is the NPV. We are at 50, so that's around 110 NPV over 11 years. So the value is around 60 million. This is overvalued. Okay. The NPV is lower than the market cap. I mean, why would you buy a company with an NPV lower than the market cap? So if uranium goes to 70, then we are at 300, which is then the market cap. So this company is just overvalued. Okay. Next, Cameco, 9 billion market cap, AIC of 30. Okay. This is the production, and this is the chart based on that production and AIC. So we are at 50 uranium. Valuation is production times uranium price minus costs times 5 multiple, which I always use for all my miners, gold miners, lithium miners. And we have 2.6 billion, completely overvalued. Next, Denison, 1.2 billion market cap. So apparently they have 3 projects, all very low cost, very good. But we have here a pre-tax of 2. Yeah, we are at a uranium price of 50. So between these two, let's say 2 billion, and that's pre-tax. So after tax, it's probably 1.5 billion. And over mine life of 14, so you need to divide by 3. So that's about 1.5 divided by 3 is 500 million worth, overvalued. Okay. Then they have the Waterbury Lake, that's the 3rd project. This has a valuation of 150 million at current prices. So that's insignificant. So Denison has very low cost production, but it's overvalued. Next, Encore Energy, 300 million market cap. AISC, they don't even know their AIC, they're just guessing their project, but it's around 40, they say. And we use our calculation, 1.6 production, 40 AIC. So that's 80 million. We are currently at 300 million. So overvalued. They also have this project here. This is just an exploration development project that's not going to production soon. This is going to production next year, but this is for the long run. So it has a valuation of around 40 million. So still not enough to give the market cap of 300. Then they also have merged with the Azalea Uranium project, which had a market cap of 100. And as you can see here, NPVs are around 100 million. So That's not bad. So actually Azalea is pretty good value, but these are just PEAs, so very long term, 5 years. I don't think it's good to invest in those things right now. So overvalued. Next one, Global Atomic. This is actually the only uranium miner that I think that it's fair value. So 500 million market cap. AISC very low, so that's very good. Production is 3.6. We do the EBITDA multiple on that, and then we get this here. So at current prices of 45, this is fair value. 500 market cap and 500 valuation, using my calculation of EBITDA of 5. So this is actually the only uranium miner that I would invest in, Global Atomic. And when you look at the NPV of the project at 50, we have 500 million NPV, and we are at 500 million market cap. So this is actually one that I like. Then Govx Uranium, also overvalued, 180 market cap. AISC production and the valuation is 124. So it's a tiny bit overvalued. The problem is these are just projects. They are not in production yet. So they are going to put this in production somewhere in 2025, 26. So you need to wait a long time for this. So this is undervalued, but I said that's too early stage. Not investable right now. Next Gen Energy, we are 2 billion, very low cost, very high production, and this is our valuation here. At $50, we have a valuation of 4.6 billion. So actually, this is not bad. Very good company. NPV at 50 is around 2.5 billion, 2.8. So yeah, this is a very good buy. I would buy this if you put a gun on my head, I would buy NextGen Energy. The problem is we recently heard about the environmental problems in Canada for uranium miners. So NXE was in that. So that's a bit of a problem. It's uninvestable for me because there is environmental risk. So I would stay away from this. I rather buy Global Atomic. Then we have Paladin Energy, 1.5 billion. Good AIC, but the EBITDA valuation, no. 400 million valuation for 1.5 billion, that's overvalued. Next, UEC, 1 billion market cap. So they have this in situ mining with a valuation of 250 million. So that's overvalued. Okay. They also have some other projects here. And this has an AIC of this and production of 2. So that's not bad. AIC of 25 is very low. And they also have another property which is in pre-feasibility study stage. But I mean, this is overvalued. 900 million and only 200 million EBITDA. And this is just something that will come later on. So I wouldn't buy this based on this number here. Your Energy, 300 million, AIC of 30, which is good. But EBITDA valuation again, 100 and market cap 300. Overvalued. So when I look at the whole sector, almost all of those uranium miners are overvalued. I can give you countless lithium miners and gold miners that have a market cap at half this EBITDA valuation. So you can easily double or triple on those gold miners and lithium miners and forget all of these uranium miners because these are completely overvalued. And I will see you in the next video.